Hello traders and welcome back to ChrisFX. Today I will take you through the 5-minute strategy that you must definitely know. First, let's roll the intro. And here we are again on Euro US dollar. We are on the 5-minute time frame. Just press 5 and enter. We have a naked chart, no indicators in this occasion. Things are pretty straightforward with this 5-minute scalping strategy. We will not look at any other time frame and we will not look back in the past for previous price action, okay, or previous structure. Nonetheless, we will be very zoomed in and we will be following price action and we will identify the best order blocks to trade from. So when I'm referring to price action, I'm referring to the very last part of the price action. What do we see here? We have this example right here. Probably I'm going to show two examples. Let's see what we have here. The very recent price action. I'm not very zoomed out, not very zoomed in. Okay, I'm not playing those small moves right here that you see, for example, here or here, even though this is possible and this is something that I'm going to teach on the course. Instead, we will try to capitalize on big movements. Again, we will not identify the small breaks of structure, which is totally fine and it is extremely profitable, but I'm not going to provide this information right here and not for free. It's not available anywhere on YouTube, and I mean it, it's nowhere to be found. So you will see it for the first time with me. Nonetheless, I'm not gonna talk about it anymore. We will identify the large breaks of structure. In this occasion, the impulsive breaks of structure, to be more precise with the use of the English language. So we break above this previous area. We are just following price action with this 5-minute strategy. Contrary to the previous strategy that I have uploaded in the previous video, now we will not be entering trades against the trend or with the overall trend. We will just follow the latest price action as long as we have impulsive breaks of structure or large breaks of structure. So we will just follow price action on the 5-minute time frame. What do we see? Again, we have one order block here, this huge candlestick that we see right here, which of course, I will teach you the secret right now. You can reduce it just to the wick. Probably you already know it by now. This is the untested part actually, but we will include this whole wick right here. And how do I know that? I do not know that, but what I can see is that this candlestick that we see right here manipulated those lows. Okay, all of these lows actually, and grabbed the liquidity below them. So if we scale down, let's say to the 2-minute time frame or the 1-minute time frame, we cannot go back to the 1 minute. I tried it. We are on the 2-minute. You can of course include this whole order block, but the wicks are order blocks by themselves. So in this instance, I'm going back to the 5-minute and I will include those wicks for the first one, and then I will include this order block down here plus this small up here to be on the safe side. So I will extend those areas to the right. Probably this is too much of an extension that I have right here, but we will see. And here we are. I think this is a little bit too large of an area. In this occasion that the areas are small already, I'm not going to take the 50%. Of course, you can go ahead with a gun box and identify the 50% of the area. But with this strategy, because these strategies are backtested, it's preferable to go ahead and place the pending order at the beginning of this order block, which is this wick. And you might ask, why pending order and not orders? It's gonna be orders. We are going to place both pending orders right here. We don't know which one is going to be activated. we will just wait. And then we will expect a break of the highs if we see a retracement ever. There we go. So let's place a line right here because this is going to be the highs. This is where we are taking our profit. We are expecting now this structure to be broken. And we continue. Now we will extend. This structure is broken, but of course, what did I say at the beginning of the video? I said we are waiting for impulsive breaks. These are not impulsive breaks at all right here. More likely than not, they're showing a retracement right here. If we would see the exact same thing up here, we would go ahead and we would identify new order blocks. Now, we saw just a minor structure. I will consider this one the high. So now I'm going to target this place, this high right here. Okay, and I will extend these areas as well. Let's go, let's move forward. And we move forward and forward. Let's see if any one of those, this one is activated, is gonna be activated. This is activated, the first one. And are we gonna retrace even more? Or are we going to break the high? And it keeps going and going, and here we see a clear break of structure. And as I said beforehand, we are not, with this strategy, we are not going ahead and playing, we are not entering trades, in other words, in these small areas right here, even though I will teach it in the course section of the website, which will be up in 2 months from now, I think. But on the other hand, we're waiting for clear breaks of higher structure. We are on the 5-minute time frame. We broke this area very, very clearly right here. On the other hand, we do not zoom out too much, not too much zoomed in. We are waiting for swing highs, let's say, and swing lows of the 5-minute time frame to be broken. We broke one, we broke twice. Again, let's show another example now. If we were, let's see if we retrace first of all. Yeah, now that we broke this low right here, we have a potential retracement. If we apply the Fibonacci tool, this is not needed, but you can see it by the naked eye. We are expecting for price to retrace at least, let's say, to the 61.8% level. As I said in previous videos, favorably at the 78.6% level. So we were expecting for price, and we are expecting actually for price to retrace somewhere back here. Now, keeping it real, do I know where price is going to retrace from? I'm gonna move this one a little bit, which is a plus 12.3% by the way. Let's see. Do I know from which order block price is going to retrace? No, I do not. What I will search for here is two things. One thing, as I said, with the Fibonacci tool, I'm expecting anything below the 61.8% level, which binds perfectly with this area of, let's say, reaccumulation or whatever the fuck this area is. Okay, and then we have this area down here. I will just include the points of manipulation. Do I know which exactly this one is? No, I do not. I would go ahead and I would include this week, these 2 weeks, this week right here, the white wick from the bullish candlestick is an order block by itself. Why do I include this one? Because it manipulated on lower time frames, we manipulated those lows, we grabbed liquidity and left. I would certainly then include this one, this order block right here. Why? Because this is the order block that broke structure, and because this is another point of manipulation where we manipulated these lows right here. Okay, and then we went. Furthermore, I would go ahead and include the lowest order block. I would include this whole area right here as you see it. Okay, happy break. Go ahead, like this video and subscribe to my YouTube channel. You don't want to miss any of the free educational content that I'm working so hard to provide you with. I extend all of those. With this strategy, as we said, we're placing again pending orders on all of those. I'm not a magician. I don't know where price is going to retrace from, and I don't want to be bullshitting my viewers. Okay, so from me you're gonna get the truth, the whole truth. There we go. We would go ahead and target this high again. We are following price action. We expect from this to be broken once again, and then we have a third order that we would be placing at this last order block down here. Let's see if we are activated in any of those trades and how the trade goes. Let's move forward with the zoomed out chart. This one, it's activated already, you see? This point of manipulation, you have to know how to identify those. It's pretty simple. And one might claim that, Chris, I would also add this one. Well, this one did not manipulate any lows, it's higher. This one is higher than this low. Furthermore, this one was tested by this one, otherwise I would probably include this one as well. Probably I would go ahead and include 4 pending orders. Let's check this out. And we move forward and forward. Nothing yet, there we go. We win the trade. So, what I wanted to tell you, until we break the next high, we do not close any order. So, it's up to you if you want to close partials, but price may do that, may activate you into this trade. You can close your partials or whatever you want to do. May come back, activate you in the second one, do that, and then the third one, and then leave. So, only when we break this high, we just deactivate those 2 pending orders because we won the first one. Okay, so this one would give us a 16.1% risk to reward. Okay, so we have a total of 28.4% risk to reward with only those 2 trades, only by breaking down price action on the 5-minute time frame, just scalping the 5-minute time frame. So this was our today's 5-minute scalping strategy on how to profit on the forex market. Go ahead and backtest it with fake money, paper money, however you wanna call it. Never put real money in order to test any of these strategies right here. This is gonna do it for today. Thank you all for watching. Until next time.